So as mentioned in the previous video, let's now look at pin bars. So in our previous video we looked at engulfing candles, when we have a candle that engulfs or overshadows the candle previous, and we talked about how useful engulfing candles are, what they can show us, and how they benefit traders. So let's now look at a pin bar. A pin bar looks something like this. As always, we have an opening price and a closing price, which forms our body. The characteristic of a pin bar is a large wick in one particular direction. So let's look at some pin bars with real price data. We have a big one here. This is the 4-hour chart of the pound against the dollar, which I've used in all of the videos. Here's a very typical pin bar. This small body and a large wick in one direction. Now, what are pin bars telling us? Well, first of all, we have our opening and closing price. On a pin bar, the body can be bullish or bearish. Does not really have any significance. It's the wick that's significant on a pin bar. What it's telling us is price was all the way up here, but because of selling power, price has dropped in the period of the candlestick from here down to here, and we could have a pin bar the other way, showing us that price was down here, but great buying power has come into the market and pushed price up to here. So pin bars show us where great buying or selling power is coming into the market, where buyers or sellers have really pushed price from one area of the market to another, from down here back up to here, and they can signal reversals, price reversals, and I'll give you some demonstrations of this. So once again, let's use the same data, and let's take that big pin bar I used for an example. Price is uptrending. We have our pushes and pullbacks. We have this push. We then have a pin bar, so price was up here. Sellers have pushed price all the way back down here. So great selling power coming into the market, and price then temporary reverses, and we have a pullback. You'll notice we have a pin bar here. Here's our body. Price was down here, but buyers are coming into the market, and then price goes for another push. We have another pin bar just here. Price pushes on the upside, we pull back, and we have our pin bar. Here's our long wick. Price was down here and has been pushed back up to here, and then we have another push. So pin bars are showing great force, either buying or selling force in the markets, and can be used as a signal that price is going to reverse. May not reverse as a downtrend comes an uptrend, or an uptrend becomes a downtrend, but they definitely can be used to signal perhaps the end of a push or the end of a pullback. If we look at a daily chart of the pound against the dollar, we can see another example. We're on an uptrend, we have a push and a pullback, we have another push and a pullback, and we have a pin bar on this pullback, our small body and long wick, and then we have a smaller pin bar appear here, small body and long wick, and then price goes for another push. So understanding the basic principles I've taught so far in these videos, that price behaves in a stepping motion when trending, and how to use this pattern to identify when a trend has come to an end. Also how to read Japanese candlesticks, more specifically engulfing candles. And pin bars. We stand a better chance at profiting from financial markets. In coming videos I will continue to demonstrate basic technical analysis principles and methods that can be used to speculate with high probability where future price is going to be. Thank you for watching.